future value investment factor of an annuity is going to be more useful in case of fixed income securities. And why it is going to be more useful in case of fixed income securities, I'm sure you can very easily understand. All the fixed income securities are nothing but annuity, isn't it? So if a company has issued a debenture for a duration of let's say 5 years or 6 years or 7 years, so the period for which the cash flow is going to happen is fixed. The rate of interest at which the company will pay interest on these debentures is also fixed. So the amount of cash flow that the subscriber will receive is also fixed. So everything is fixed, and that means the fixed income securities, please remember, by default are nothing but annuity. And therefore, when you are dealing with the fixed income securities, this future value investment factor of annuity is going to come in very handy to you in finding out value of the investments that you are making. So that's your future value investment factor of annuity. Now, the fourth thing in the context of compounding is known as sinking fund factor. Now, what is sinking fund factor? Very simple. Sinking fund factor, in simple words, is nothing but inverse of future value investment factor of an annuity. It is literally inverse of future value investment factor of an annuity. Now, what the sinking fund factor tell you? Please remember, to understand what the sinking fund factor will tell us, we first need to understand what the future value investment factor of an annuity tells us. So it tells us, if I invest certain amount periodically at certain rate of interest, a future value investment factor of an annuity will let me know as to what amount will I have in my hand at the end of annuity. So that is what your future value investment factor of an annuity will tell you. What is the sinking fund factor? So if you look at the formula, you can see it very clearly that the formula of sinking fund factor is absolutely inversely opposite of the formula for future value investment factor of an annuity. So when we were trying to find out the future value investment factor of an annuity, the formula was 1 plus k raised to n minus 1 upon k. And now in case of the sinking fund factor, the formula is opposite, and that is k upon 1 plus k raised to n minus 1. Meaning what? Meaning sinking fund factor helps you to find out opposite of what the future value investment factor of an annuity was letting you know. So what sinking fund factor will let you know? If I have to receive an X amount at the end of a certain period, to receive that X amount, how much money should I invest periodically at a given rate of interest, so that the amount that I invest together with interest that I would earn on this amount aggregates to my target sum that I want to achieve at the end of the annuity. And that is what is sinking fund factor would tell you. So in other words, sinking fund factor can also be found out by using by reversing this formula, or by using this so that this is how you would be able to find out. So this is how you would be able to find out. So Okay, so this is how you can see it here. So sinking fund factor is equal to 1 divided by future value investment factor of an annuity. And let us do a small case on this. So let's find out a small case on this. And here I am giving you the numbers. You can see them. Yeah. So A Limited has to repay rupees 55,000 worth of debentures at the end of 5 years from now. How much should the firm deposit each year at an interest rate of 5% so that it grows to rupees 55,000 at the end of 5th year? So please find out and tell me as to how much should they invest so that they are able to how much should they invest periodically over next 5 years when they are going to earn return at the rate of 5%, so that the amount of investment that they make and the interest earned on this aggregates to rupees 55,000.